Market news now. Equities in Asia rose with Chinese stock gauges higher on expectations of more government stimulus. More government efforts to shore up the economy emerged on Friday, including a plan to boost consumer industries. Japan remains a focus for traders. On Friday, the Bank of Japan governor said that the central bank would allow 10-year bond yields to rise above a ceiling it now calls a point of reference. Meanwhile, locally, the JSE was weaker this morning while its global peers were mixed as investors digested economic data in the US with a focus on jobs data this week. Markets will also look at the Bank of England's interest rate decision on Thursday. They're expecting 25 basis points following June's 50 basis point hike. To give us more perspective on the markets, we are joined by Lukman Otunuga from FXTM. Lukman, thank you so much for your time. Your sense of global market sentiment right now, and what do you believe to be driving that?
Yeah, thank you for having me here today. Global equity markets are struggling for direction this morning with sentiment mixed as investors across the board are bracing for another data-packed week, with more central bank meetings and corporate earnings from the largest companies in the world. I think, with the bucket list of high-risk events and key data, most investors are on the sidelines waiting for the next big catalyst.
So let's talk about the oil price for a bit, because about a few days ago, we were all highlighting how the oil price had just gone over that 200-day moving average. What's your sense of some of the factors that could possibly drive oil prices a little bit higher?
Yeah, certainly. I think what we're seeing right now, it's more of the supply side of the equation. Oil is heading for its largest monthly increase in more than a year, as markets are thinking that the reduction in supply from OPEC Plus and Russia is really feeding into the supply side of the equation. On top of that, we've got a weaker dollar based on the fact that the Federal Reserve may be nearing its end of the hiking cycle that's supporting oil. But ultimately, the demand side of the equation still remains quite cautious. We've got, a mixture of sentiment from the world's second largest economy, China. Although there's stimulus hopes, there's still concerns over China's economic outlook. So this is likely to cap upside gains on oil prices in the short to medium term. I think we should keep very close attention to the virtual OPEC meeting on Friday, which could give us more clarity on what to expect from oil over the next few weeks.
I mentioned in my intro that probably one of the biggest discussions was coming out of Japan on Friday, where the Bank of Japan tweaked its yield curve control policy. What do you make of that? And I suppose as well, what are you asking yourself in terms of what's next for the Bank of Japan?
Yeah, absolutely. We saw that the yen was injected with explosive levels of volatility, last Friday based on, the surprise the Bank of Japan released to us. I mean, when we look deeper into it, even though, monetary policy was left unchanged and the yield cap was left the same, the key takeaway is rather than having a cap, the Bank of Japan is saying that it's going to be a limit, to the reference point, meaning that, this could be a small step towards the central bank pivoting down the line. We've got a combination of inflation rising in Japan, so there's a possibility that down the line that the Bank of Japan could move towards raising interest rates. The timeline is still uncertain, but I think markets are believing this pivot is likely to be a possibility, and this is going to keep supporting the yen in the short to medium term.
So let's stay with the central bank theme. The Bank of England this week is probably going to help us seal the deal, I suppose, when it comes to central bank policy announcements. What are we expecting here on Thursday?
Yeah, this is really close to home, me living in the UK. Everybody around here is feeling the pain of high interest rates and high inflation. The Bank of England is widely expected to move ahead to raise interest rates by 25 basis points, moving the key rate to 5.25%. This will be the highest level since 2008. In the UK here, even though inflationary pressures seem to be slowing, it's still well above the Bank of England's 2% target. However, we've seen repeated disappointing economic data that is fanning fears that the UK could be heading to a recession. Nevertheless, though, the Bank of England is expected to keep raising interest rates, and there's even speculation that it may move ahead of a 50 basis point hike like it did in the previous meeting. I think ultimately, whatever the outcome, because rates are expected, this is supportive for the British pound.
We've been talking about the soft landing narrative for quite some time now, with a lot of analysts actually believing that maybe, the Fed might be able to engineer that soft landing. With these narratives becoming a lot stronger, are we starting to see that soft landing optimism filter through to emerging market countries?
I mean, the prospects of the Fed, potentially ending its hiking cycle and, a soft landing, it's a theme that down the line is likely to stimulate global risk sentiment. And to answer your question, one just needs to take a look at the rand, which is seen as a proxy for emerging market risk. It's gained over 6% versus the dollar month to date. And if you look at other emerging market currencies, they seem to be rising, really fighting against that dollar. I think as risk sentiment continues to improve and we get, more positive economic data from the US and more confirmation that the Fed is indeed finished with hiking interest rates, this could feed back to an increased appetite for emerging market currencies.